Welcome to Markets Now. I'm Michelle Rook along with Mark Schultz, Northstar Commodity, mixed trading grain and livestock futures. And let's deal with the grains first, Mark. We have corn and wheat lower, soybeans back to the plus side, helped with some new contract highs in the soybean meal market.
Yeah, the bean market has still been the great performer of the three. Uh, and I think the one thing that still sits there with the beans is you've got good export demand yet and good demand across the board in the soybeans and in the meal. Bean oil kind of just sits in the middle and then doesn't know what it wants to do there. But though the other two are doing quite nicely, crush margins at roughly between $2.80 to $3 a bushel. Those are some of the best levels we've seen on record. So I think you're going to see people wanting the crusher looking for beans and he wants to buy them. And I think the other one, of course, is still going to be the Argentine crop. And you have to realize Argentina is one of the biggest exporters of meal in the world. And they're probably going to be out of the market here for the time being because we're still in a warmer, drier trend down in Argentina, which would suggest that most of the farmers still don't know whether they're going to have 10 bushel the acre, 15 bushel, or 30 bushel the acre beans. And as long as they're going to be suspect there, I think they're just going to become tight holders. And we sit back, and that's where we're getting at least a little bit more meal business done in here through the United States.
Yeah, I wondered if meal would go back up and make new contract highs because I felt like that was the key for this market to retrace. But yet, it looks like maybe most of the Argentina crop losses are kind of worked in. We can't get soybeans at least back over the 1550 mark. And so we need a little bit more oomph for maybe some even lower crop size estimates.
Yeah, I think you're absolutely right. I mean, if you look at it over the course of the time, we've been trading this drought now since January.
Right.
February in Argentina went down to be one of the hottest on records in here. And yet we still have not been able to get the soybean market to take out the 1550 resistance level on the nearby March and May contracts. And we might have to do something like that before we finally start seeing something else turn the tide, go in the other direction. So as much as the crop continues to go down and still projected to go down even further in here, you're going to have something maybe a little bit more of a shocker in here, or this export business, like I've been saying, which everybody looks for it to back off. It is slowing down, but we're still beating and meeting the projections needed to meet USDA's export projections. I still think the carryout on beans, quite frankly, is going to go lower, not higher.
Yeah, I'm with you on that. Export inspections this morning, I think our total commitments now are 3% above a year ago. So certainly that speaks to what you just said. What about the corn and wheat market, though? Corn, certainly we've got to hold last week's lows, and corn looked like it was trying to put a bottom in, but just cannot get any momentum, even though we got some confirmation of some of this export business rumored yesterday. And it's really the function of poor exports and this terrible wheat market, isn't it?
To me, it's still the wheat market, and the wheat market has fallen so easily to the downside. And that's really kind of the shocker to me, because when you look around, you really don't see much that's changed in the wheat market. What does is a little bit on the defensive here for the wheat is the fact that European wheat today now at new lows for the year. That doesn't bode well. It's obviously brought our wheat market down to new lows for the year as well. Well, we just continue to struggle. I understand that wheat export business is nothing to write home about, but at the same time, nor is our export projection. We're not expected to be any better. And I still think we've got the opportunity to at least meet the poor projections that we have for exports on wheat. I think we're probably going to achieve that. The winter wheat ratings are poor if you're in the western parts of Texas, like Oklahoma, Kansas, parts of Nebraska. Elsewhere, it's improving. And I think that your overall drought situation is getting probably a little smaller, not bigger in here. So wheat's come out of dormancy down in the south, and we shall see. They're going to need some moisture there pretty quick. Otherwise, you're going to see it deteriorate. But we just simply can't get the wheat market started. And until we do, I think the corn market's going to have continue to be a struggle as well.
Yeah, and I think there must be some ideas that we're going to get the export corridor in the Black Sea extended now. The discussions at least have started.
Well, they've started, and if you go back to the last time, and when they came about and said we're going to halt the exports, and one day and we had the market shoot up sharply higher, and now the next day they came back and they put it back in place. I would suspect if it does, I mean, the futures are probably indicating that the corridor will continue to be extended.
Gotcha. What about this cattle market? It seems like we get buying on just about every break here, and we're scoring new contract highs in the back months of the feeders again this morning.
Yeah, this market is still very orderly, and you're right. There is no big move to the upside, and the corrections are $1.50, $2 at the best, and then we move right back on up. I mean, here's the difference with the cattle compared to the hogs is look at the alignment of the futures market. You get the futures trading in the 160 on up to 165, 166 area, but that's where your cash is trading. So there is no premium. Futures are not trading at a premium to the cash market. The cash is almost leading the way. So as long as the cash continues to do nicely, I think the futures the downside is limited. So I'm still impressed with this market. I still think in the big picture, we're going higher. How much? I mean, I can do some chart work here that probably suggests wouldn't rule out 185 or 190 between now and another year. I mean, within the next year that we see cattle prices possibly get that high. And that's I think as you look at it, each week that goes by, there's just going to be the cattle numbers are just going to continue to slowly dwindle and get a little bit smaller. And we've yet to start holding back heifers to rebuild the herd.
No doubt. And cash trade has been going up in an orderly fashion. Box beef values, choice continues to march higher. And when do you see that ending?
Well, you're still in a seasonal that you should still be going up. Watch here. I think you're going to have some cold, cooler temperatures. It's maybe not as cold as it was forecasted on Friday, but you have cooler temperatures. So maybe not off to an early start on the spring grill season. With what we have, that may slow it down a little bit. But overall, I still think the market has the potential yet to see this market go up. And you're right, just like it is with the futures, the box beef, even though it is $290 and it's been moving and it's high, we've been higher than that in the last 4 years. So we're not outrageous yet. I think domestic demand is maybe slowing a little bit, but it has to slow 3-4% if you're going to get in and slow this thing down. And so far, I don't think we've got to those levels yet. So that's why I still am optimistic the market's going to move higher.
Meanwhile, we can't seem to get any traction over in the hog market. We can't get the cutouts to move much past like the $85 mark, and numbers have continued to kind of swell here. Is that the problem? Why we can't get any traction, or what else?
Well, I think a couple of things here. If you go back, look at last year, you had poultry prices extremely high. You had beef prices relatively high as well, and the pork seemed to get more of the demand picture at that time. And we had health issues with pigs last year, and numbers had dropped significantly. In this case, now we're sitting here where the pork has built up in the coolers once again. So there's adequate supply of poultry right now. There's adequate supply of pork, and the beef is still adequate too, although that is likely to start coming down. But we're still got plenty of product in the coolers. We just don't move. Pork is the cheapest meat of the three, and poultry prices have started to go on up, but they're still, compared to a year ago, probably some 40%, 50% less than they were last year. So we're not sitting in the same alignment to see a market that goes higher. And unlike the cattle, the hog futures have got this huge premium already in. You're trading $84, $83.90, $84 April hogs, and you got a cash index at $79. So you're already trading at a premium. Then you look at the summer months at 100 to 103, and you're $22 premium on the futures to the cash index. So until you can get a bigger movement that is sustained with both the cash and the cutouts to move higher, it's going to be difficult for the hogs to make a lot of traction to the upside on the futures.
Yeah, futures are going to have to wait for the rest of the cash to catch up.
Yeah, the cash and the cutouts have to start catching up and have more. You can't just be up one day and then give it back the next. And that's what we're doing. We're not doing any sustained every day, moving a little bit higher. Slowly.
No, that's why I said we just can't get any traction there.
No traction. You're right.
Yeah. All right. Good to talk to you as always. Mark Schultz with Northstar Commodity, and that is Markets Now.